In today's video, we're going to discuss a stock that might make a huge move tomorrow and why you should keep it on your radar. We're also going to be looking at the overall market to get you guys prepared as always. Alright, y'all, let's dive into the charts. Right off the bat, we got the SPY futures this time. Once again, what I told y'all would happen on Friday didn't occur. It tried to make a push in the morning, but unfortunately, at 9 o'clock, I think there was an economic data that was released, and the market took a detour. All right, so it's quite unfortunate that this had to occur in that fashion. Right now, the price is below 60.70. And that 60.70 level is acting as resistance. As you can see, the futures is not going over that line. Will it not go over the line tomorrow morning? I'm not sure. Maybe we'll see how it opens up. But as of right now, it did something that it's not supposed to do, especially after the breakout. It didn't go over here and it fell below that line. So we will see what occurs. Next level to be wary of is this one, 59.38, which is not impossible. I think we might see it. This is the time when we want to take things day by day. When we look at the daily charts, the bears are in control at the moment. They are. Okay? So hopefully it gives a dip buying opportunity at the bottom, all right, which will make the shorts very, very happy going into Monday and Tuesday. Be on the lookout for CPI data because that's going to be reported on the 12th. And that is going to cause more volatility to kick into the market. Now, let's check out the NASDAQ. The NASDAQ looks like this. Level of support along that bottom line is around 21,200. All right. Okay, so the stock for this video, the stock for the video that you want to keep in your radar, that stock has earnings in the morning, and that's McDonald's. Now, McDonald's looks like this. It's been trying to climb since the 21st of January. It's been making a steady push. There is a structure on there which is making me lean more bullish towards the earning reaction. There is this thing on here. There's a bull flag on the chart. It's not the cleanest. But there's also a gap right here between 300 and 310. 302 and 314. So the opportunity lies on how it opens tomorrow. And based off of how they do through earnings, right? We want to see an earnings beat. We want to see EPS beats and sales beat on the stock. And preferably, what I really want to see for McDonald's is I want to see an opening. Wait a minute. This is okay. Yeah, I want y'all to have an alert right here. I want y'all to have an alert literally at like 2.99. Like if it doesn't move at all and opens near this price, the first 5-minute candle is the key to a massive move. Again, what we want to see is a big candle, a big green candle, right? Anywhere between like 297 and 302. The first candle, we want to see it to be green. And we also want the volume to be huge. Like similarly to a candle like this. That's what we want to see. Remember, earnings typically for the stock is going to triple the daily volume. On average, that's what it does. It either triples or quadruples the daily volume. So again, if there is a massive beat and it opens up in this range, then the gap to get taken care of is around here between 302 and 315. If it doesn't get filled on day one, then it's most likely going to get filled on day two. All right, so just have an alert on the chart and patiently wait. All right, just patiently wait. It's also not a bad thing for the stock to consolidate until like, let's say Tuesday afternoon. All right, let's just say the stock goes nowhere and it just consolidates between 292 and 300. It just consolidates here, and it closes on Tuesday right above 300. That's an opportunity ahead of CPI, right? So keep McDonald's on your radar. I like what it's showing me at the moment. I like what it's showing me. I'm not in it. I'm watching it just like the rest of you because, again, I don't gamble through earnings. I don't gamble through earnings. So just keep this on your radar. Now, let's do an update on some of the stocks that I've mentioned in the last video. First one, Apple. I told y'all to watch Apple for a long. I had Apple, and I did take a small loss on Apple. And let me share with y'all why. Let me share with y'all why real quick. So, Apple looked like this in the final 5 minutes of market hours, and I wanted it to close at exactly 233. I saw the structure. I liked it. I didn't see any flaws on it. I like the increase in volume at the close. So I decided to buy calls on it. All right. With the stop loss being literally like at 232.5. And now going into the next day, it was looking quite promising in the first like 8 minutes. It was looking like it wanted to go. But unfortunately, after it popped out of here above 233.5, it had a nasty U-turn, and I had to get out of it at like 8:57, right before that dump. Let me show you guys. So it popped out of here above 233, which is the line of resistance that stretches from days back. Played a whole lot of games, which I hated, and then I had to cut losses at 8:57 right here, right before the release of that economic data. All right, so it's unfortunate. The structure was looking good. I told you I would take that trade 10 times out of 10 because I know the rules about the structure and about this trade. I know what it's supposed to do and I know what it's not supposed to do. It's how do I say this? It's easy for me to make quick decisions without thinking so much. Like if I see what it's not supposed to do, I just immediately get out. I don't think twice, right? Because I know the structure. I trade it a lot. I look for it all the time, and it's just easy to monitor and to manage. The risks are well defined. The stop loss is well defined. Price target well defined. All right. So this is unfortunate, but that's all right. That's okay. With Apple right now, it's looking a bit sloppy. The daily chart is looking kind of bearish. If we go onto the 1 hour and we clean up the chart, there is a not too clean structure on there. It looks a little sus. There isn't any breakdown yet, and to me, I think it looks a little bit narrow. I think it might just consolidate some more at 230 before showing something better ahead of CPI. Like, I'm not too convinced that this is gonna make a huge move. I just think it's gonna play games. So just have an alert right above resistance at 234, and also set an alert right here. And let's see how long it takes and how long it demolishes traders in this box before we get to make our move on it when the stock decides to make a decision on the direction. All right, so just patiently just chill out. The next one that we gotta look at, Microsoft, is the other one. Microsoft, it looked bullish at first. We had a bounce from this level between Thursday and Friday, right? We had a break right here, and then a retest and a pop out the gates. But then again, we had the nasty turnaround right here, and this thing turned kind of bearish. Same situation with Apple. It looks very nasty, and we got to wait for new structure on it. Okay, same thing again. Patiently wait. Now let's take a look at Tesla, because Tesla is looking quite vulnerable. It's been vulnerable throughout the whole week, and it's right at support. A break below that line is gonna cause a lot of chaos. I'm gonna let y'all know right now. It's not looking too great. like I would be more bullish on it if we got a bullish engulfing candle, like I was hoping we would get, like an opening at 358 and a close at 385. I was hoping to see that, but that was out of the picture because of the way it opened. We didn't gap down before the day opened. We just like went sideways and then we played games and we immediately fell. So it's quite fragile at the moment. The downtrend isn't over. The bears are still in control of Tesla. That gap at 260 is present. I'm not saying it's going to get filled there, but there is two more gaps to take care of before we even think about this one. There is one right here, right at 340, and then there's another one right here, right at 320, which again, this didn't get filled on that specific day on the 27th, right? So that's still something to worry about. Two gaps, all right, to get filled. So patiently wait and see. Day trade, intraday structures. At least that's what I'm doing with the stock. When a stock shows nothing, don't force any trade. It's okay to just sit on your hands and just wait. The last stock that we're going to look at in today's video is Google. And Google didn't do too well through earnings. All right, ever since they had earnings, we have a massive gap down, and then we have the sell-off on Friday. And the next thing to look for is that right there. And just because of this gap that needs to get taken care of, that's why I'm not leaning so bullish on the like indices, especially the Nasdaq. Like, I think that when the Nasdaq gets down to this line, 21,172, I think Google is gonna follow that move and fill the gap right here before we see a bounce. That's what I think. That's my honest thoughts on all of these stocks, and that is the end of the video. Do not forget to annihilate the like button as always. I make these videos from Sunday to Thursday at exactly 8 p.m. Central Time. All right, so definitely click on that subscribe button and click on that notification bell. That way you don't miss out on future uploads. If you'd like to be part of a private community where you can get all of this information in real time as I see them, you can find that as the first link in the description of the video below. All right. Don't forget to follow my social media at Paul Naguma and at Patternology Lab on Instagram and on X. And lastly, to get some free stocks with Webull, you can use the third link in the description of the video below. What's good, ladies and gentlemen? This is Patternology Lab, where we trade patterns and patterns only. And I will see all of you in tomorrow night's video.